Welcome. We are so glad you're here today. I have a special guest that I'm going to be interviewing, and we're going to be talking about self-directed IRAs. This is an amazing tool that most people don't actually know about. You have the opportunity, the option of directing where your retirement funds go. Most people think they just have to go the traditional route with stocks and bonds and mutual funds, but you actually have control and you can decide to invest in something different. And so I'm really excited to introduce you to my friend, Kurt Power. We met actually through mutual client that works with Mock Speed Lending and also some mutual friends. This space is small. When you're doing good work, you connect with really great people. And so I've had the chance to get to know Kurt over the last 6 months or so, and I've been so impressed with him and Madison Trust Company. So he's going to tell us today about what he does there, about what they do. I'm going to walk through a number of questions that I have for him, and he's prepared answers for. And we're just going to provide some education so that you understand your options. And ultimately, we'd love to see you come and work with Mock Speed Lending. But if we're not the right fit, there's so many other great companies out there that are alternative assets that you can put your retirement funds into. And so, Kurt, I'm going to let you take it away. He is a senior strategic relations executive with Madison Trust Company. He lives in Kansas City. And so tell us about yourself, if you don't mind.
Absolutely. It's a pleasure to be here, first of all. And I couldn't agree with you more about the status of our industry. And one of the reasons why I've been in it for 13 years is the relationship capital that we make along the way. And that extends obviously to clients that we have, but also the relationships that we have with sponsors that we work with. And, restate what you said, man, those of us that do things the right way and do things with good intentions and do it the right way, we tend to find each other. And that's been the blessing for me in this industry of how I've built a network, is just finding myself in similar rooms with like-minded people. And the ones that aren't cut out for it, they weed themselves out, and that's a good thing. So no, I'm happy to be here because self-directed IRAs have been getting a lot more attention of late, with sponsors that raise capital or just different ideas of how people can truly diversify their retirement. So we love doing this in Madison Trust, doing outreach to educate people, meeting people where they are. That's part and parcel of our business plan, is how can we take this tool for wealth building and take it to the masses. So this is a great way of doing that. So thank you for having me.
Yeah, absolutely. Thanks for taking the time to be here. So, a couple questions we're going to walk through. First one I want to ask is what exactly is a self-directed IRA and how does it differ from a traditional IRA or a 401k?
That's a great question, and one that we get really on a frequent basis because you kind of mentioned it in the introduction that so many people, when they think of IRAs or 401ks, they automatically assume fidelity. They automatically think stocks, bonds, mutual funds, things of the like, publicly traded assets. The reality is that that very same IRA that they already have at a Fidelity, Schwab, whomever, that same IRA doesn't just have to be in the publicly traded markets. You get to take it and have real diversification in the form of real estate, private lending, private placements, mineral rights. We've seen everything. We've seen Arabian racehorses. We've seen film companies, movies, anything that you can think of under the sun can be done within a self-directed IRA. I tell people all the time, when you're driving through any metro area and you look around and see the buildings, those buildings are done with pensions, with 401ks, with IRAs. It's all around us.
Mhm.
So that becomes the talking point for us, is how do we take that to the masses? Um, if you really want to be diversified, my opinion is, if all you have is a bunch of mutual funds in an IRA, you're not really diversified. You just own a ton of mutual funds. Real diversification is key because that is what helps you mitigate risk. That's what helps you ride out the volatile times in the economy. Stop me if you think that we are not in a volatile economy right now. We certainly are.
Mhm.
So that is really when diversification can help you win the game, but also navigate some of those downturns.
Mhm.
True self-directed IRAs, they allow you to invest in alternatives beyond stocks.
Mhm.
Period. Full stop. That is the biggest thing I want people to take away from this. Your retirement plan that you have
Mhm.
can be done self-directed into alternatives. There's processes in mind, but that's why we're here to help.
Yeah, that's good. Thank you. So, why don't most people know that they can invest retirement funds outside of stocks and mutual funds?
Really, it comes down to a lack of education, in my opinion.
Mhm.
And again, it's kind of a set it and forget it mentality when we have an account at a Fidelity or Schwab, or we have our 401k through our employer. Many people will just look at the statement. It went down. I hope it gets up next quarter, or it's gone up. Let's keep it riding.
Mm,
They don't take that next step a lot of times of what else is out there, what possibilities are out there.
mm,
President Trump, love him, hate him, whatever your thoughts are of him, he did make an announcement in the last couple of months about 401ks being able to invest in alternatives.
mm,
Now, nothing legislative wise has happened, so I want to caution people not to think that your 401k is not going to go invest in self storage or do private lending. But what that did more than anything else is it did bring awareness
mhm.
to alternatives within retirement plans.
Yeah.
And that's great for Madison Trust and companies of the like because it's gotten people reaching out to us. Or when we do outreach, the question is, I assume you're reaching out because of Trump's announcement. It's like, well, no, quite the contrary. These have been around since the 70s.
Mm,
Self-directed IRAs started in 1975. The Roth IRA has been around since 1997, went into effect in 1998.
mm,
So these have been around forever. And the wealthiest people on planet Earth
mhm,
use self-directed retirement accounts. Peter Thiel's the gold standard example.
mhm.
A $2,000 Roth IRA in 1999 into PayPal is now worth 6 billion with a B. So the lesson I want people to take from an example like that is A, don't go into thinking if you put $2,000 in an investment, you're going to be worth 6 billion.
Yeah.
That's awesome if it's the case. But the principle of the steps involved that Peter Thiel did can be done from anybody.
Yeah.
Whether it goes from 2 to 6 is another story,
Mm,
but the principles of what he did can be replicated to the average person.
that's good. I love that. Thanks for sharing. So, is there a minimum amount that someone needs to roll over or transfer to open a self-directed IRA?
No, there's no limit on transfers and rollovers. You can move as much, as little, or all of it to do an investment.
Mhm,
But I would tell people just being transparent. If your investment is $100,000 and you've got $1 million in your IRA at Fidelity,
mhm.
you maybe don't need to move the entire thing over because you want to be diversified as best as possible. And
Yes.
there's no tax implications for moving it from another custodian to Madison. It's going from one retirement plan to another one. So that's a very key point. You're
Mhm.
not taxed. You're not looking at any kind of implications when you do that movement.
That's good.
Really, the only thing that have a limit when it comes to IRAs are the amounts that you can personally contribute.
Mhm,
With Roths and traditional, presently it's $7,000 a year, 8,000 if you're 50 years of age or older. That
mhm,
changes in 2026 to 7,500 and then 8,500 if you're 50 or older.
mhm.
So that's a great question. Another one that we get frequently is what's the limits? Really, the limits are just what you can contribute. But if you've already got money, you can move as much, as little as you need.
Mhm. That's good. So, do you see a growing trend towards private capital or lending funds or real estate notes? And if so, why do you think?
I do. And when I say I think those of us in the self-directed space, we are seeing a bit of a shift towards that.
Mm,
And the why on that to me is I I think that there's less volatility
mm,
in private credit, lending funds, real estate notes, especially compared to what's going on for the better part of 2 years on the commercial real estate side.
mhm,
And I think investors they've got their eyes up. And what I mean by that is if you've only been doing commercial investments or single family investments,
mm,
point I made earlier, that's not really being diversified. Not that you should be reckless. You should invest in things that you know best.
yeah,
But when there's volatility in the market in a particular asset class,
mm,
the smart, sophisticated, savvy investor, they start to educate themselves on other possibilities.
mm,
And why I think that we're seeing so much more in private lending is the truly passive nature of it.
mhm,
You set the interest rates between you and the borrower. If it's a fund, you know exactly what your minimums are and the expectation in terms of cash flow coming back, how long you're in it. It just gives a bit more predictability and control
mhm,
within the retirement account. Still got to do your due diligence, still got to know the operators you're working with.
mm,
But that's a long winded answer of saying, yes, we are seeing much more activity on the debt side and the lending side,
mm.
specifically because it's more predictable rates of return on an annual basis.
Yeah, I love that. We're obviously fans of it and excited to share what we're doing here at Mox
Yeah.
Beat
Oh,
Lending.
yeah. You got the sign right behind you.
Yeah,
Yes.
that's right. That's right. We do provide just a consistent, steady return annually, and we provide quarterly distributions. So we're passionate
Right.
about what we're doing, of course. But from your perspective, what makes a private debt fund an attractive asset for self-directed IRA investors?
It's restating something I just said. It's the passive nature of it.
Passive.
When you have predictable streams of income and the exit strategy is clearly laid out,
Yeah.
that gives, I think, investors more confidence. But also within, when we talk about exiting,
Mm,
having flexibility as an operator within the plan of when to exit, because we see so many of the 3 to 5 year holds or 7 to 10 year holds.
yeah.
Well, what happens in 5 years if we're World War III? What happens if
Yeah.
we have unemployment through the roof, which
Mm,
is being speculated in the next handful of years due to AI, quantum, et cetera?
yeah.
Having that flexibility allows you to have predictability, in my opinion.
Yeah.
If it doesn't make sense to exit at
Mm,
that time, then let's stay in the deal.
yeah.
If it does make sense to exit, then let's exit and let's compound and do it all over again.
Yeah.
So that's why I think it's becoming much more attractive is it's passive with some options built into it.
Yeah. With our fund, we do have a compounding option on a quarterly basis. So it's really nice because obviously you're not going to take your retirement capital out. I mean, you have to leave it in unless you want to take some
Right.
penalties. And so every quarter that you leave it in, it is compounding and growing a little bit faster. And so we offer our investors a 10% annualized return for investments under 500,000. For those above 500,000, it's 11%. So it's strong, it's consistent, it's only a 1 year hold. And we just ask for a 90-day redemption notice. If you want to pull your capital out, give us 90 days. So again, you're not locked in for that 5, 10. I mean, I'm in one
Right.
long-term like debt, not a debt fund. I'm in a long-term equity deal, a fund of funds, and it's a 10-year hold. So I mean, it
Right.
is. I think we're in year 4 or 5 now. So we still have 5 more years, in that deal, and it's cash flowing, but it's not as strong as this. And so I think that,
Right.
having the ability to make a strong return on your capital in just a year period is really nice for
And another reason why people love it is if you're only getting single digit returns, then my question, it's a friend of mine talked about this in a presentation, then why would you be in alternatives? You can get your single digits in the public markets. So the upside on the passive investments, I mean, it's the mailbox money concept.
yeah,
You give your money and you get a return.
yeah,
That's the beauty of it.
yeah.
And that's why I think it's becoming more popular.
Yeah, I totally agree. I have a retirement account actually with American Funds. I don't have much left in there now because I've self-directed it, but I opened it up in 2012 and I left the company in 2019 and kind of similar thing where I set it and forgot it. It just sat there for many years and I just didn't spend a whole lot of time paying attention to it after I left. And I looked back, I think it had been in for 9 years or 10 years at that point. And I looked at the annualized return that was averaged out. It was 6%. I was
Yeah.
like, I can't
Yeah.
believe I've been sitting on a 6% return for all of these years. And I think so many people do that.
Oh,
They're like, I don't have control. I'm just going to leave it and just let it do whatever it's going to do. And it's just so sad because you have better, more lucrative options that are going to help you long term with your
exactly.
retirement. So,
And the point you just made on 6%, 6% is nice, but I think that those type of returns as it relates to retirement accounts, it leads us down a path potentially of a retirement
mhm.
not having enough.
Yeah,
And
yeah,
with that in mind, it's like, why wouldn't you self-direct? Why wouldn't you find some investments that can give you returns above and beyond that to help accelerate the timeline of employment to retirement, to where you can actually enjoy those retirement years and enjoy the fruits of what you've worked for. So
exactly.
it just it goes on and on and on of the power of self-direction, the control piece, yes, but also it's like start thinking about your future self. Where do
Yes.
you want to be when you're in your 60s and 70s? Where do
Yes.
you want to be and how do you want to live?
Yeah, and 6%, some years it's barely beating inflation. So
Right.
is this really the best place to have your money? And I'm not,
Agreed.
and again, I totally agree on diversification. I do want to like emphasize that, Kurt, like I would never
100%.
tell anybody to come and put all their capital with us. You should diversify. There's so many good options out there. But just make sure you're knowledgeable and you know what you,
That's the key. The more knowledgeable you are, the better decisions you stand to make.
yeah.
And I'm the same way. We're in the self-directed space, yes, but I don't encourage people or tell people. I mean, I can't legally tell people what to do, but it's like diversification is diversification. It's having it in both. It's not having it all in one. Though we are real estate people for the most part, alternative people, and
Yep.
we believe this to be a better strategy. It doesn't beat having real diversification because any return is better than no return.
Yeah. Mm,
But if you can have more of a return, then that's better than any return.
exactly. I couldn't agree more. So, what is the simplest way for someone to move funds from a traditional IRA or an old 401k into a Roth IRA or into a self-directed IRA with Madison Trust?
The easiest way to do it, and this is not me being salesy, it's part of the process. Step one is open an account with Madison Trust. It takes literally 10 minutes.
Mm-hmm.
And once the account is established where we have an account number, now it comes down to the mechanism of how are we moving it? Is it transferring from an existing IRA or are we rolling over an old 401k? If we're transferring from an IRA, we at Madison, we initiate that transfer on the client's behalf, custodian to custodian. So it eliminates any possibility of taxable distributions to the client. So it goes from one IRA to the other. Very, very simple.
Mm-hmm.
401ks, still a simple process, maybe a bit archaic in my opinion. They typically do them by check. So if you call your 401k provider and tell them you want to roll it over to Madison Trust, give them the account number, they're going to send a paper check made out to the IRA to you, and then you would then send it to Madison.
Okay.
So it's very, very simple to open one. And even better, since we work together, Madison and Mock Speed, I set up an account application for anybody that's in the Mock Speed network to where you all will get $100 credit to your account right out of the gate. Covers your account opening fee and your first investment processing fee. So I don't know what more incentive somebody would want after hearing that you get control, you can do these type of investments. Oh, by the way, your first one's on us. That makes it pretty compelling. And you have great help all along the way. If you have questions on things, my team is adept at reaching out proactively. We have account executives and coordinators that reach out to clients. Do you need help with the application? Do you need help with the funding docs? Do you need help with your subscription documents? We want that white glove service because the goal is speed and accuracy. We want to get an account open, funded, and invested in as little as 2 weeks.
Awesome.
We can't do that if we're not helping along the way and going back and forth. I'd rather get things done right the first time than create work on the back end. And that's what set us apart in the industry from other custodians is we have this dedicated service, this dedicated team that sponsors that we work with across the country love because they know that it's off their plate and they're in great hands.
Yeah. That's awesome. You answered my next question, which was how long it takes. So thank you for jumping ahead. So then once funds arrive in the self-directed IRA, I mean, you kind of already answered this too, but I know one thing I'll make really clear is with these diversified investments, these alternative investments, everyone has different timelines. If it's like a
Right.
equity deal, there may be like a really tight timeline for when the property is closing. And so you need to be really clear with Madison Trust and your sponsor that you're working with on, hey, I haven't even started the process yet, and it's going to take a couple weeks. So we're going to be able to get the funds
Yeah.
in time, for the deal to close. So
That's critical. And we do ask that question up front when we're talking to people about, do you have an investment in mind? Yes, they do. What's the timeline?
Yeah.
Because we want to be able to set proper expectations.
Mm-hmm.
If somebody was to open an account today and say, I need it funded and invested by Friday,
Yeah.
I have to be honest with them, probably not going to happen for a myriad of reasons.
Yeah.
Chief among them, we don't control the other custodian who's sending the funds.
Yeah.
So, and we have those conversations with clients about if it is a quick turnaround time, some ways in which to discuss with the sending custodian the urgency in mind.
Yeah.
Because the last thing we want to do is miss a deal or have an investor miss a deal because of either paperwork wasn't done accurately or funding times weren't on. We want to eliminate all of that. So we got to be transparent up front and set the proper expectations, which we do every time.
That's good. I love that. So you already sort of alluded to this too, but what fees outside of that initial $100, what fees should investors expect when opening and maintaining a self-directed IRA with Madison Trust?
Only transactional in nature. So there's incoming, outgoing wiring fees, and then an annual asset fee to hold the investment at Madison, which keeps your investment safe, tax advantaged. It helps you stay in compliance. So yeah, it's just those. It's an annual asset fee and transactional fees for sending money in, money coming out.
Okay. So the fee structure, how does it compare to others in this space?
As a flat-based fee custodian, there aren't a lot of flat-based fee custodians. We like to keep things simple. If you got $10 million in your account or $100,000 in your account, you're paying the exact same number. It's $556 a year.
But per asset or just per account?
Per asset.
Per asset. Okay.
Per asset. And there's ways that we can discuss if somebody has multiple assets, ways to save on fees, IRA, LLCs, things of that sort. So that's the thing I want people to take away when we do a consultation. we're having a full, well-rounded discussion as it relates to your individual situation as the client. Because not everybody is the same, to your point. Some people have much more accelerated timelines. Some people don't have accelerated timelines, but we need to establish that up front so that we know exactly how to convey to the client the proper expectations, what they can look for from a timing standpoint, what they can expect from a fee standpoint. In the end, we're not in the business to just fee people to death.
Yeah.
Quite the contrary. That's why IRA LLCs can make a lot of sense for people, and that's an entirely separate topic that we can have a whole webinar or interview on in its own right.
Mm.
But we are transparent. We're honest about what they are, and we're honest about what you get for the fees.
Yeah, that's really good. And I remind investors often, that your traditional accounts, if you've got a financial advisor, like a wealth manager, typically they're taking what, 0.5%, 1%. I mean, every group is different, but they're taking this asset management fee every year, and it's off of your full amount of assets in there, whether it's
Exactly.
growing or dropping in value. They're still taking a percentage every single year. And if you look at that, I mean, it adds up
Oh,
fast.
100%. And that's the trick as a consumer and as a client is pay attention to what's going on, not just the numbers of did it go up or down,
Yeah,
but at what cost, what expense
yeah,
are you paying when it goes up or down? And
exactly.
ours are consistent. There's no fluff. There's no BS with our fees. It's straight away right in front of you. It's one page.
Yeah.
And a lot of the fees, quite frankly, should never even come into play, like take an annual asset fee, or not annual asset fee, a fair market value.
Mm-hmm.
We give people plenty of notice of fair market values being due,
Mm-hmm.
so that they should never have to have a special research fee on top of that. So again, we over communicate to clients, which is what we have to do. And we have 22,000 clients. We don't want anybody to feel left behind or blindsided by something. So we over communicate to save them money.
That's really good. Oh, and that's part of my next question is what support does Madison Trust provide throughout the investment cycle? You've already kind of hit on this. Is there anything else you want to add to that?
I mean, the biggest thing is we ensure that the retirement money will remain tax advantaged through the investment cycle.
Mhm.
On top of that, our support team is always available. So you call Madison Trust, you're talking to a live human being. You're not talking to AI automation. You're not talking to somebody overseas. You're talking to a real person.
Mhm.
And we're here to answer the questions you have about your retirement dollars, such as how to properly take out distributions.
Mhm.
What time can you take them out free of penalty and taxes? What types of accounts have those advantages?
Mhm.
How they can transfer funds or even asset valuation. Our goal in the end, with everything that we do as it relates to client satisfaction and self-directed IRAs, the goal is to ensure you have a seamless investment journey.
Mhm.
That's the goal. Like,
Cool.
believe it, be confident that you've made a right decision for the investment. Hopefully you make a ton of money on it.
Mhm.
And we're just a nice conduit to allow that to happen.
Yeah, yeah, that's huge. Makes a big difference. Why might an investor consider diversifying? I mean, we sort of already talked about this. I don't want to be too repetitive. Diversifying their retirement funds into
Some of these
private
are worth
credit and real
restating.
estate. Yeah, yeah. I mean, I think we've talked about it, and we'd love. I mean, the mailbox money, like I said, I think is, and you said this. It's just really nice to whether it be with your retirement funds or even you have capital sitting on the sidelines that you want to invest. I think that just the mailbox money. Who doesn't like
Oh
having some
yeah,
passive
and
income?
something that you just said there is critical, in my opinion, is when we're looking at doing investments, it doesn't have to be an either or.
Mhm.
When I mean either or, you're qualified or you're non-qualified dollars.
Mhm.
Ideally, if you've got retirement dollars and you have personal funds, be it 1031 exchange or just money, to your point, sitting on the sidelines,
Mhm.
do both
Yeah, I
and,
agree.
and reap the benefits of tax law
Yeah.
as it relates to us as individuals, peoples, tax paying people, and take advantage of the tax laws as it relates to retirement dollars and the tax shelter that is.
Yeah.
You know, that's one big advantage that I think doesn't get hit on enough with self-directed IRAs is
Mm.
when that money is coming back in from the investment.
Mhm.
It's either tax deferred or tax free, depending on your account.
Yeah.
It's free of capital gains taxes,
Mm.
and you have the freedom to do with those returns whatever you see fit.
Yeah.
Roll it over to or transfer it over to Schwab,
Hmm.
compound it, reinvest with the sponsor,
Yeah.
let it sit there until you have
Mm.
enough built up to go do another private investment.
Yeah.
But that's the beauty of it is it's truly a tax shelter that then you get to control what you do with it.
Yeah. Absolutely. And it's not hit by the market. That's part of my next question, which again, we already talked about this a little bit too, so I don't wanna be too repetitive. But how do these help mitigate volatility compared to investing 100% in the public markets? I mean, one thing I think about is just a political figure that makes some statement that makes all of the stock market drop 35%, and like there's years of your hard work that's gone in a 10-minute period, like
By
that's
narrative
unfortunate.
and speculation. That's a great point, and one that over, I think, especially post COVID and the current political landscape in our, not just in America, globally, many times we put way too much stock in what a politician, a governor, a president, whomever says. When in reality, to me, real estate still is a very localized investment. Pay a lot more attention to what your mayors are saying, your city planners are saying, your local congressmen and women. That has far more to do with your investments than what the president does or does not say. And it's amazing to me how the market reacts when a political figure of a certain stature says something. The market either goes running this way or it goes running this way. And it's like, man, that pendulum can get crazy sometimes. So just
Yeah.
if we're gonna, and politics do play a part in economics, they play a part in business. We'd be naive to say they don't. But I would get far more involved as a citizen, as an investor with the local governments and what they're doing. I mean, Airbnb, for example,
Mhm.
Airbnb is under siege in metropolitan areas across the country,
Mhm.
hotel unions, et cetera. It's kind of like Uber 2.0 in a way of it's an alternative,
Yeah.
like Airbnb, it's an alternative to staying in a hotel. Well,
Yeah.
now certain municipalities, you can't have Airbnb within that. So that's why I challenge people really pay attention locally what's going on,
Good.
because I haven't heard
Mhm.
President Biden or President Trump talk about Airbnb.
Yeah.
But I have heard councilmen and women talk about it. I have heard governors and mayors talk about it. So we got to pay attention to that as well.
Absolutely. That's so good. So who's a good fit? You've already mentioned some of these people already, but who's a good fit for self-directing their retirement dollars and who might not be?
I think that the good fit. Well, and let's go with let's go with that one first. So experienced investors,
Mhm.
you know, those that want control and diversification,
Mhm.
the long-term patient capital, that's what we call IRA money, is patient capital.
Yeah.
I can't take it out whenever I want. I'm going to pay a tax and a penalty if I take it out early. So
Yeah.
I used to raise money in self-storage, and during COVID,
Mhm.
I think we raised $3 million 30 times because people were taking it out, putting it back because we didn't know what was happening in the world at that time. That's a very huge exception.
Mhm.
By and large, you're not going to have people telling you, "Oh, my son or daughter's getting married. I got to pull 50 grand out." It's like,
Yeah.
well, no, you can't. It's patient capital and it's restricted of when you can take it. So the
Mhm.
people that understand that,
Yeah.
they're organized and compliance minded individuals, high net worth, entrepreneurial. I mean, the more of the control, kind of
Mhm.
control freaks, which entrepreneurs can be because they're taking all the risk. So by all means, they should have some control.
Yeah.
In terms of who may not be, I think inexperienced investors. Um, that's a broad statement, but if I look at it like this, like if somebody's investment strategy is single family, wholesale, fix and flips,
Yeah.
buy and holds, whatever that is,
Mhm.
and then they come across a
Mhm.
mineral investment, a lending investment, and
Yeah.
they have no prior knowledge of that,
Mhm.
that's an inexperienced investor. I mean, I think you got to do your research on the
Mhm.
asset class, yes, but also on the operators that you're working with.
Mhm.
So inexperienced people, sometimes they just get jump in because they're so excited that
Yeah.
they forget to do a few steps of due diligence. The short time frame, the need of liquidity, like as the illustration of the point of a wedding, because I've had that happen too, where it's like I got to pull money. I was like, you can't. You just can't. You got to understand that it's in for the ride.
Mhm.
And those that have a low risk tolerance,
Mhm.
investments inherently carry risk.
Yeah.
We all know that. Even
Mhm.
as operators know that, and operators are transparent. There's risk.
Yeah.
Don't just base this off a pro forma. I've got a buddy of mine down in Atlanta that used to say,
Mhm.
I've never seen a pro forma I didn't fall in love with,
Mhm.
and I've never pro forma's broken my heart worse than any spouse or girlfriend I ever had. So
That's good.
know that going into it, there is some risk. But
Uh-huh.
if you're so risk averse that you can't get out of the analysis paralysis, you got to educate yourself a little bit more. There's always going to be an opportunity down the road. Just don't hamstring yourself thinking you have to do something when you're not properly prepared for it.
Yeah, absolutely. Just don't put all your eggs in the same basket, too. I mean, I couldn't agree with more than what you
I
just
mean,
said.
Mr. Buffett
Oh,
was the one that coined that phrase, and it's like I think it turned out pretty well for him. Well, by the way, Warren Buffett, I saw an interview with him the other day, and they were talking about mentorship,
mm,
and I love Warren Buffett. Who doesn't?
yeah.
But they asked him like, "Who do you go for? Who do
Mm,
you go to for advice when things are tough?"
mm.
And without missing a beat, he said, "Well, typically when that happens, I just look in the mirror and talk to myself." So, but the proof's in the pudding, man. That guy is. I mean, he's a legend and universally respected because of his acumen, because of his strategy. I mean, this is a guy that
Mm.
is the third or fourth wealthiest man on planet Earth and still determines his McDonald's order predicated on what the market's doing. It's incredible.
Oh, it really is. He's a smart guy. So we're
Oh my
going to
God,
wrap up here. There's a couple compliance and structure questions I'm going to ask. We saved the best for last. Compliance and
mm.
structure is so exciting. So what rules or IRS guidelines should investors understand before self-directing their retirement funds?
Yeah, this is a critical one, and I hope people are paying attention to this part. And this part is not to scare people; it's more to make you aware. You got it. Part of due diligence is understanding structure. Part of due diligence is understanding the do's and don'ts, especially as it relates to your retirement dollars. Understanding what you can and can't do as it relates to IRS tax code is critical. There's a certain amount of due diligence that has to be done on the investor's part. But the things like disqualified parties, disqualified persons, prohibited transactions are necessary, you
Mhm.
know. And you think about disqualified persons, it's very easy. It's you, your spouse, your parents, grandparents, children, grandchildren, their spouses.
Mhm.
So if I want to invest in a deal with Mock, and
Mhm.
let's say that we're spouses or son daughter whatever, I
Yeah.
can't do that because I'm receiving a direct personal benefit from doing that. So you
Yeah.
just have to understand the principles involved,
Yeah.
of how to structure and how to invest to make sure it's in compliance, because the last thing you want to do is do something that's prohibited and then
Mhm.
get a knock at the door, so to speak, metaphorically from the IRS, and jeopardize your entire retirement account. um, that's why we do our own due diligence at Madison Trust on investments.
Mm.
Every investment that comes in goes through a pre-approval process with our investments team.
Mhm.
All of the documentation, your subscription docs especially,
Mm.
are reviewed. And we have a phenomenal coordinators team to ensure that the docs are filled out correctly the first time, but also to ensure that there are no disqualified parties involved. Sometimes saying no to an investment is not because, well, we just want to say no and
Yeah.
have it in for you. It's, well, no, you can't because it's prohibited and here's why.
Yeah.
It's that ongoing education that we try to help people with.
Yeah.
But every investment done within an account at Madison Trust must be titled correctly. You got to get that out of the way too. It's not you doing the investment, it's your IRA. So it's
Mhm.
Madison Trust Company custodian for benefit of your first and last name and the account number. You'll
Mhm.
use our address, you use our EIN, not your personal information, not your social security number, or any of that stuff. That's where having a custodian like mine at Madison, and I
Mhm.
say mine because I've been in the IRA space for a number of years, and most of the custodians in the space were my client at one point. There's a reason why I chose Madison, ladies and gentlemen, when I was looking for a place to go. It's because the service piece, but also the education, the expertise, and the fact that we have no issue holding a client's hand when they need it. Hell,
Mhm.
we don't have a problem holding their hand when they don't need it. We just want to help and,
Mhm.
and ensure that things are done correctly.
That's good. Mm. Great points. Thank you for sharing that. And I mean, with every deal that you do, there's typically, going to be like a 506B or a 506C side to it. Like for Mock Speed Lending, we started as a 506B and it was just friends and family that we brought in. And now we are transitioned to a 506C. So investors do have to be accredited, that they do have to have a net worth of Turner, or they have to have a net worth of $1 million or more, not including their personal home, or be earning $200,000 per year as an individual or $300,000 as a couple for the last 2 years, and the future moving forward, the year coming up. And so that is one thing that we have to make sure is very clear, and we have proof that they're accredited before they invest with us. And so, but every group's different, and they have different setup in terms of how their fund or their deal is structured. So make sure you understand what the ramifications are, and make sure you read the paperwork. I can't say enough about that. Like, there's typically a lot of paperwork, and so make sure you read it, have your attorney read it, or your CPA, like get people involved. Don't just do it on your own because there is just a lot to know in this space, and you don't want to go in blindly.
I tell people this, don't be cheap, be frugal when we're talking about asking for help,
Yeah.
because something that you just said resonates. And you've got part of due diligence isn't just the deal, the partners, the principals involved. Part of due diligence, in my opinion, also extends to your CPA and tax advisor, your attorney, the quote unquote power team that you have
Mm.
behind you.
Yeah.
They're there for a purpose.
Yeah.
And part of that purpose is to help guide you and protect as best they can
Yeah.
you doing the investment. And the better educated you are, the more you understand it. In
Hmm.
my mind, not only are you going to be a better investor and have and know what to look for, but you're also going to be a better client
Hmm.
and a custodian
Yeah.
because you understand things better. Now,
Exactly.
again, there's ongoing education, but the more education you have that you're armed with up front, the
Yes.
better chances you stand to make good investment decisions on behalf of your retirement account.
Absolutely. Absolutely. Don't lean again, like you just said, don't lean on the sponsor or the IRA, self-directed IRA, any of us. Like I tell my investors all the time, I am not a CPA. I'm not a
Right.
financial advisor. I am not an attorney. Like you have to make this decision yourself and consult with the right people. I am not that person. We
Yeah.
work with max speed lending. So just to be really clear on that and know your limits and where to ask for help and don't be afraid to do it.
And that's a disclaimer I should have said at the beginning. I'm not a CPA or attorney either.
I know.
I'm a passive custodian.
Yeah.
Do your due diligence, consult your CPA tax advisor. What we're doing today is talking really more than anything to educate you a little bit more, not just on Mock or Madison, but just how these retirement accounts work. And to Rebecca's point at the beginning,
Mm,
obviously I want you to work with Madison,
yeah.
and Rebecca clearly would want you to work with Mock, and we marry the two together. It's win-win-win for everybody. But the reality is there's other investments out there as well. And something might catch your eye that maybe resonates with you a bit more.
Yeah.
Point being, your due diligence needs to be on point regardless of what you're doing.
Absolutely. Yep. We should have definitely included those disclaimers at the beginning. So we're including them now.
Sure.
Please do your due diligence. But that's all of our questions today. Kurt, is there anything else that you want to add? We've covered a lot in this time.
And nothing process wise. I mean, process is process. That's very easy to talk about with people. Um, I make myself available to anybody. My email is kpower@madisontrust.com. My number is 845-271-7546. Call me anytime when you have questions. Text me, email me. My phone number that I gave is my office line, but it does do text messages. I like to joke with people. I'm not married. I don't have kids. I've got two dogs that are very understanding. So if I'm responding to emails or text messages offhand at 9 o'clock at night, they're very understanding. You're not bothering me. Um, but no, I never saw myself in the IRA space. Hell, I never saw myself in alternatives when I got out of college. I thought I was going to work in the fitness industry and go do something else after that.
Mm,
And what I discovered early on was my mission in life was always to help others.
mhm,
And the first vehicle I used was fitness, and it's been alternatives and IRAs ever since.
mhm.
But the dream and goal has always been how can I help be a bridge or a conduit to people's success?
Yeah.
So I encourage people reach out anytime. It costs you nothing to talk to me or anybody on my team at Madison. We're here to help you. And if we can do business together, great. But in the end,
Mm.
I'll restate it. I believe that the more educated you are, the better investor you're going to be and the better client you're going to be. So lean on us for assistance. That's what we're here for.
That's awesome. Thank you for sharing that. Thank you for being here today. Thank you for taking the time and
Oh,
sharing
you're welcome.
all this helpful information. I'm excited to share it with our audience and hopefully educate them more in this space and maybe they'll take the step. We encourage you, if you're listening today, to take the step and consider investing in something different outside of the normal, thing that we've all been
Be bold.
accustomed.
Take a chance, man.
Yeah, take a chance.
And I'll
Start with
say
something
this.
small.
I'll say this because it's worth saying.
Mm,
We know, we know this. We know that alternative investing works.
yeah. Yeah.
We know that self-directed IRAs are a thing, and we know that they work. Question becomes, how does the individual make it work for them?
Mm, that's good.
Arm yourself with education and a good network,
Yeah,
and the pieces fall into place. And we're here to help.
that's right. Thank you so much, Kurt.
You're
Have a
welcome. Thank
wonderful
you.
day. Thanks, guys, for listening.
All right. Take care, everyone.